corporate regulator exposes mortgage industry neglect of customers in hardship. In a hard-hitting report set to be released on Monday, the Australian Securities and Investments Commission, ASIC, has unveiled a disturbing pattern of neglect by major mortgage lenders towards customers experiencing financial hardship. ASIC's investigation revealed that over a third of customers attempting to apply for hardship assistance, a process designed to adjust repayments and provide temporary relief during times of financial distress, were thwarted by unnecessary obstacles. The report cites the harrowing case of a mortgage customer facing domestic violence who sought to postpone loan repayments to secure a safe haven for herself and her daughter. Despite her distress, the customer was subjected to an hour-long hold by her lender, only to have the call abruptly disconnected. A second attempt met a similar fate, while an online hardship application failed due to technical issues on the lender's portal. It took a grueling 5 weeks for her to finally receive a loan deferral. Another distressing case involved a long-term customer who sought assistance due to an illness that interrupted his work schedule. Instead of receiving guidance and support, he was repeatedly transferred to the lender's collections team. The customer was directed to visit a branch, only to be informed upon arrival that he needed to call. ASIC Chair Joe Longo decried the lack of support and empathy extended to some home loan customers. For people who reach out to their lender to signal they need support, this can be devastating, Longo stated. Too many Australians in financial hardship are finding it hard to get help from their lenders, and it's time for meaningful improvement. The regulator's report scrutinized the practices of 10 major home lenders, including all of Australia's largest banks, following a stark reminder of their legal obligations to assist customers experiencing hardship. The surge in interest rates since mid-2022, coupled with soaring living costs, has fueled a significant rise in the number of households facing financial strain. During the last quarter of 2023, hardship notices for home loans increased by over 50% compared to the same period a year earlier, according to ASIC. Frontline services have also reported a sharp spike in cases of financial abuse, a pernicious factor that can lead to severe hardship, even homelessness. Under the National Credit Code, lenders are obligated to consider varying loan contracts if customers express their inability to meet repayment obligations. ASIC, however, identified that the root cause of many of the problems was that lenders prioritized financial risk and operational efficiency over customer experience and circumstances. Many lenders aren't taking their customers' unique situations into account, instead providing a standardized, one-size-fits-all approach, which is not meeting customers' needs, said ASIC Commissioner Alan Kirkland. The lack of support, and in some cases failure to respond when customers flagged they were struggling, is unacceptable and greatly adds to the distress of customers already struggling with heightened levels of stress and anxiety. ASIC's findings serve as a stark indictment of the mortgage industry's response to customers in financial hardship. The regulator's report highlights the urgent need for lenders to overhaul their processes, prioritize customer welfare, and provide meaningful assistance to those struggling to meet their financial obligations.